March 27, 1980. A trading floor in New York is in freefall. Silver is dropping $5 an hour, and two brothers in Texas are watching $1 billion vanish before lunch. They own more silver than most nations on Earth, and by end of day, they will owe more money than they can ever repay. Nelson Bunker Hunt and his brother Herbert were sons of H.L. Hunt, one of the richest men in American history. Old Texas oil money. They didn't need more wealth. But Bunker had a theory about what was coming. It was 1973. Nixon had just ended the gold standard. The dollar was no longer tied to anything real. Bunker was convinced inflation would destroy paper money. So he started buying silver at around $2.50 an ounce. Physical silver. Tons. He didn't just buy quietly. He bought futures contracts on the exchange. He bought physical bars by the ton. He chartered planes to fly silver to Switzerland to avoid U.S. reporting requirements. And he kept buying for years. Here's what the price did. Silver sat at $1.50 an ounce for years, flat, ignored. Then it started climbing. Then in 1979, it went vertical. By early 1980, the Hunt brothers held an estimated 100 million troy ounces of silver. That is roughly 1/3 of all the privately held silver on the entire planet. One family, one bet, one commodity. January 18th, 1980. Silver closes at $49.45 an ounce on COMEX, an all-time record, up from $1.50 just 10 years earlier. The Hunt family hoard is worth somewhere close to $5 billion. On paper. But here's the part nobody mentions. When you control enough of any market, the market stops working the way markets are supposed to. Prices disconnect from reality, and the people running the exchange start watching you very carefully. 3 days after the peak, COMEX changed the rules. Silver Rule 7, no new long positions. You could only sell, not buy. The Hunts were frozen out of the market they had spent 7 years building. And without new buyers, the price had only one direction to go. Every dollar silver fell triggered a margin call, a demand from the broker. Put up more cash right now, or we sell your position. The Hunts kept paying. Week after week, they believed silver would bounce back. It did not. Then March 27th, 1980 arrived. The Hunts missed a $135 million margin call. Just missed it. Silver opened at $15.80 that morning and closed at $10.80, down 32% in a single trading session. Here is what Silver Thursday looked like in numbers. The loss was so enormous it threatened to pull down several major U.S. brokerages. The Federal Reserve stepped in and organized an emergency rescue, $1.1 billion from 13 banks, just to keep the financial system from collapsing. The government saved the system, not the Hunts. This is what the fall looked like for one man. In 1988, a court ordered Bunker Hunt to pay $134 million to a Peruvian silver firm he had helped destroy on the way up. That same year, he filed for personal bankruptcy with debts over $2.5 billion. The man who once owned 1/3 of the world's silver could not cover what he owed. Here is what this has to do with your money. Not silver, not billionaires. The move that destroyed the Hunts is the same move that wipes out regular people with $10,000 in a brokerage account. They saw something going up. They borrowed to buy more. Then they refused to sell because they were certain it would keep going. That loop, see it rise, borrow, hold, deny, is not a billionaire mistake. It is a human mistake. 3 things you can do right now. Step 1. Never borrow to invest in a single asset. Not crypto, not a hot stock, not a friend's tip. Step 2. If one investment is more than 20% of everything you own, that is too concentrated, start spreading it. Step 3. A gain you have not sold is not real money. You only keep what you lock. The Hunts did not lose because they were unlucky. They lost because they believed the rules did not apply to them. The rules always apply. If this story changed how you think about risk, subscribe, there's more where this came from.